typically what we see on the supply side is generally two main functions of interest, which of course is mine supply and recycled gold. There's typically mine supply has been pretty much even over the last sort of 10 or 15 years, kind of on that 2,000 ton level. The recycled gold is something that you see in the market from jewelry, from electronics, and typically that's a little bit more price sensitive than you see with respect to the mine supply. Mine supply doesn't necessarily get driven too much by price, but certainly when you see higher prices, you typically get to see a lot more net investment on the scrap material comes into the market, sold, and it's typically taken benefit of those higher prices. So as I mentioned, in terms of demand, I guess that supply there is sort of mislabeled, pardon me. So basically there's a fair bit of a gold that's within the market in general. Virtually every particular ounce of gold that's been produced is somewhere in the world, and that total historical production has been close to 200,000 tons. And those 200,000 tons, sit somewhere with respect to jewelry, private investment, official gold holdings in central banks, and sort of other means. But it's interesting to note because that material doesn't get consumed. Gold doesn't get consumed in the same way that copper does, or with other materials, including silver. So that's one side of the market that presents always, in my opinion, some risk to higher prices, because this can be mobilized at any particular moment in time, because it's sitting virtually on surface, can be sold very easily. So that has an impact certainly on the supply. So
obviously, many of you heard about the silver squeeze weekend, end of January into February, where record amounts of silver were purchased. The bank's own ETF data showed 120 million ounces over 3 days, which personally, I run a show where I talk with silver investors around the world and analysts. Nobody is able to see where that metal could have come from, especially given how on February 2nd, the true record-setting day of that 3-day stretch, where the price of silver fell 10%, despite historic records being set in SLV, as well as at the actual physical dealers, many of whom have reported, and I haven't found anyone to contradict, but I have an official statement from a couple saying it was by far the most silver they ever sold, the most phone calls they ever received, and they would have sold a lot more if they had been able to answer all of them. But imagine if you wake up and you have 800 voicemails. At some point you realize, all right, I can't get to all of these today. So you had this buying surge, and then Goldman Sachs came on and said, hey, it's just a fad, nothing's going to happen, no reason for concern. Although they changed the legal language in the prospectuses of SLV and the other silver trusts to specifically protect them legally against a short squeeze, because they saw exactly what was happening. They changed the documents, and then they have had many other representatives talk about why there couldn't be a short squeeze. But ironically, a couple of months later, the LBMA, who is one of the head honchos in the silver game these days, amazingly enough, they mentioned in their silver report, which is still on their website, and by all means, I would encourage people to go check it out, because what I'm about to say sounds too wild to believe it's true. I had a hard time. I thought I was dreaming when I was reading the LBMA saying they were weeks away from running out of silver.
So what you need to understand is the Federal Reserve Bank in America is basically expanding their balance sheet, and just recently the balance sheet has reached, for the first time ever, $8 trillion. And still, Mr. Powell keeps the printing press rumbling. And just the last week again, the total assets rose by another 37 billion in 1 week. Okay, the Fed balance sheet now equals about 37% of the GDP of the United States. The ECB is already at 78%. And the Bank of Japan, as you might also know, is already at 134%, the balance sheet of the Japanese central bank against the Japanese GDP. So there is certainly room to expand this kind of like crazy policy. I don't think it's a sustainable policy, but at some point, people are losing faith in their currency. And the same thing actually, like in America, is happening here in Germany and in the Eurozone. So Madame Lagarde, again, also ramped up the balance sheet over the last week. I think another 35 billion were created out of thin air. And then you wonder why stock market is continuously moving higher. I mean, the Nasdaq just reached a new all-time high. And I'd love to show you the chart now, but it's you have to believe me, you can definitely see that global liquidity and the stock markets are basically moving in tandem, parallel, higher and higher. And that's basically what the cracker boom is saying.
You have to understand the relation between them. There is a lot of confusion, and governments in general, not just the central banks, like very much to confuse people on the definition of inflation. Some people say that inflation is just an increase, in general increase in prices, but you can have a general increase in prices, what they call good inflation, if the economy is doing very well. For example, my country, Romania, in the 1930s, 1920s, they found oil at the end of the 1890s and produced an economic boom in Romania because of this oil, which at that time was becoming the ingredient, the necessary ingredient for the new economy, the technology economy of the engines, and produced an incredible demand in oil, and very few places to get it. Texas was one in the United States, and in Europe, the only place was Romania, and it ended up by being called in the 1920s the Texas of Europe. You can call it today the Saudi Arabia of Europe. That brought a lot of money at that time. Payments were made in gold, and the incredible high reserves, gold reserves of Romania today are in large part of those payments for oil in the 1920s and 30s. That's what you call good inflation. A great economy, for some kind, it could be technological, and in this case for Romania, it was natural resources, oil. Saudi Arabia, the same thing. That is an increase in prices due to an enrichment of the population of the country.
It all starts with raw materials, everything. So you either farm it, you mine it, you drill it for oil, or you create hydropower from dams, etc., and so forth. But the supply chain starts with the supply of a basic material. And I wanted to look at logistics management for a little bit because that means how you're going to get it from point A to point B. And in fact, in a mine, if we mine steel or gold or silver or whatever, it starts with us, and oftentimes it cycles back again because we use the finished goods to build the mines that we create.